over the last year to the third quarter of 2015, the private sector has created 3 times as many jobs as the public sector has lost. So private sector is generating employment. What was interesting was the fact that manufacturing was responsible for the most jobs created over the last 12 months, maybe something which it's not going to do over the next 12 months, which we'll come on to in a minute. But in looking at the services sector, the private sector services, the biggest sector, it was flat in the third quarter of 2015. And one of the biggest sectors within that, while we described the retail mini boom, business services and finance accounts for 1/3 of private sector services. It's down 5% over the last year and pretty much at a record low. So challenges for the service sector in 2016. We've got national living wage, which will affect things such as areas such as private care homes, which we're already hearing signs of distress and a number of closures. So turning first of all to the service sector, how do you see it now and going into 2016?
The service sector presents a very mixed picture. The services to households as consumers have been pretty stable, that's fine. It's where we have services that are supportive to business in the wider sense, or indeed they're supporting businesses outside Northern Ireland. The evidence is that we're not doing very well in terms of jobs, and as you say, in terms of business services, finance companies, call centres, all of that type of thing, we've really had a much less impressive performance than we would have wished. And it's quite worrying that in this period, whenever the costs of those services are likely to go up, as you say, because of the living wage and minimum wage, this is a very vulnerable sector of the Northern Ireland economy, and the question is, how will it survive? Now, first of all, in terms of those business services that are business to other businesses, you have to say the market will have to redetermine the prices and they will have to survive. And Northern Ireland does compete well there with the rest of Great Britain. But in terms of the personal services, and I think you touched on it, in terms, for example, of care of the elderly, residential care, we then have a sector where undoubtedly the living wage is going to affect the viability of those projects. And we actually have a policy in terms of the care of the elderly, which is very dependent on the private sector maintaining its residential and nursing home care. And there's a huge question mark, as we've seen, over whether they will all survive. And the question will immediately go back to government. Are you prepared to do anything to make that sector more viable?
The second largest source of employment growth over the last 12 months was the information technology and communication sector. It doesn't have a demand problem, doesn't have a cost problem, but what it does have is a supply problem where we don't have enough graduates and high-skilled labour to meet demand. And moving on to another area of the services sector which will be affected by the national living wage is the whole hospitality and tourism sector. It'll be affected not only through the national living wage, but also from, if you look at the exchange rate, sterling euro exchange rate, potentially going to go to levels last seen in 2007. So tourism, 2016 may be good for demand, but profitability is going to be a key concern for the sector going forward. I suppose turning to then manufacturing, there's been a star performer during the downturn since the trough of 2009, strong rates of growth. But what we saw yesterday with the latest figures was good in terms of employment growth over the last year, but then looking at manufacturing output growth in the third quarter, it recorded its fastest rate of decline since 2009. So lots of challenges for manufacturing in 2016, not least our economy's exposure to a number of large firms, Michelin, also JTI, the Gallagher's tobacco plant. Both of those firms are set to begin their redundancy programs next year. And we also have our big exposure to ongoing uncertainty with Bombardier. So how do you see manufacturing?
When you look across the manufacturing sector, unfortunately, the way news evolves and the way information percolates, we tend to know more about where the problems are than where there are likely success stories in the making, and I hope there are more there than we know about. But you're right to put your finger on the jobs threats that we've been living with. Quite remarkable that Bombardier has managed to get an injection of equity into its company in Montreal, which indeed is some sort of reassurance that that project will eventually become, I hope, profitable for them. And the very fact that the Canadian authorities were prepared to buy the equity, it was in fact a vote of confidence. But if you come back to other sides of Northern Ireland's manufacturing and services, there is an extremely good success story in terms of First Derivatives, a very good success story in terms of Kainos, in terms of it's now floated on the alternative market. We have examples of success, and indeed there are so many other companies. I think that the engineering side of business and heavy industry seems to have the potential to grow again. A little bit more worried about the food sector and food processing. Not terribly reassured.
Again, national living wage will
National living wage, yes, puts up the margin of their costs. And despite the official argument that the cost of business in Northern Ireland is lower than other regions, that doesn't take you away from the fact that if you're running a firm and living wage takes your costs up, you say, it doesn't matter how we compare, this is costing us more and we have a problem. But so we have a series of problems across the rest of the economy there, where we will have to see how it works through. And the question will be, some of these firms may be in a position where they will, put it this way, put a pause on any wage growth in order to protect their viability. And we may see public evidence of that. Indeed, there may be debates between employers and employees, but I think we have to face that in 2016.
And if we look at then issues such as energy costs, impacting on manufacturing, although I noticed that Germany's energy costs are pretty high by European standards, but that probably underscores their productivity, their huge productivity superiority relative to other people. So how do you see energy costs as being an issue?
If we were in a German society, I would complain about high energy costs, but I would feel I could cope with it better given the other circumstances. In Northern Ireland, high energy costs for the big users are a significant problem. And we now have the special group to study this problem, chaired by David Dobbin. But I think this is a much deeper problem than has so far been acknowledged. Our energy policy in Northern Ireland is at the moment being disturbed by uncertainty in terms of where are we in terms of policy for renewables. We're paying too high a price for renewables capacity, higher than the market needs. And in fact, what is happening here is that the attempt to justify that is being met with unpopularity by the people who would like to invest at the present high rate of return. In terms of energy policy, we've got domestic consumers paying roughly the same as in Britain, but industrial consumers paying much too high a price. And the test for the David Dobbin Advisory Group is, what in terms of management can you do to change that? I don't think there is a magic wand that you can wave. But I think we can talk about a different style of regulation and a different approach to the problems of state aid if we want to interfere in the energy market. But energy markets are going to be the totem pole on which we now judge how can industry perform. It's been used against us in terms of tobacco. It's been used against us in terms of tyre manufacturing in Michelin. And it could be used, indeed was being used against us by Bombardier. Now Bombardier is building its own energy plant in order to get cheaper electricity. Now, that really isn't an ideal answer. We should be getting a better answer for the whole of industry.
And while a number of our large multinationals are decoupling from the Northern Ireland economy and set to leave in 2016, 2017, I suppose that highlights the need where Northern Ireland has to start up more businesses itself. We've seen in figures in the last month or so that Northern Ireland has the lowest birth rate of any of the UK regions in terms of business startups. It also has the lowest death rate, which is not a good thing because we don't have this creative destruction and turnover and forcing businesses to start up and churn into new businesses. And I suppose that's going to be one of the challenges. Yeah. And indeed, that's something.
It's an interesting contrast. A very low startup rate, but a low failure rate. Well, if you don't have the startups, You don't
Because
have the fields.
you mentioned the first derivatives, the chaos, and what we have to do is it's actually focus on the entrepreneurs, build on these people who actually build businesses, because that's going to create the wealth going forward. And that's one of the reasons why Ulster Bank is supporting the whole entrepreneurial spark initiative.
Easily said, much more difficult to deliver, but it is the ultimate test of how we run this whole economy. How does it react, and the incentives for individuals to develop businesses further? And you rightly put your finger and say, above all else, that's the important message for 2016.